Welcome to this new webinar of the EU SME Center. Today we will focus on e-mobility. This is a hot topic in China, especially because China issued a strategic document called Made in China 2025, and among the 10 priority sectors that they want to develop in the next years, there's this sector called e-mobility. And today we will have Stefan Kracht, Managing Director of Fiducia Management Consultants, to explain us what are the implications for European automotive auto suppliers. But before that, please let me introduce you the EU SME Center. The EU SME Center is a European-funded project, and now we are in the second phase. We have 6 implementing partners, and the main purpose of the SME Center is to help European SMEs to get ready to do business with China, either being by investment in China, exporting to China, or helping to serve Chinese partners. We are based in Beijing, and we have a team of 14 people. And now please let me introduce you the speaker. Stefan Kracht, as I mentioned before, is the Managing Director of Fiducia Management Consultants. He leads a team of 120 specialists across China, and they help European companies and foreign companies to enter the Chinese market and position themselves in a strategic way so they are successful in this market. I read that Stefan is a German but born in Hong Kong, so I was quite surprised about this. And he has already 20 years experience in this market. He's working in Hong Kong, Shanghai, and also Germany. He was also a consultant, management consultant for Bain & Company, but afterwards, after this experience, he founded his own components and materials trading company in Shanghai. So he knows what are the issues, the challenges that SMEs and companies face when they come to China. And today we have him here to talk about this very interesting topic. I will leave now the floor to Stefan.
Thank you for that kind introduction, Xavier. I would like to now look at the agenda and spend roughly only a couple of introductory minutes about Fiducia, since you kindly introduced me already, but rather spend the main part of my time talking about what Made in China 2025 is about. Going from there into the implications, especially for automotive suppliers, in 3 levels. Each I would spend about 10 minutes: product development, value chain, and competition, because things are moving based on changes in policies and the market. And then finally spend some time to talk about key success factors. What have we seen our clients do in the market in China? And that already brings me then to the next slide, which is about Fiducia, and in this case the background to our company. All of what I'm talking about today is really based on our experience with clients. We've been doing this sort of work for 35 years in our 4 locations. Xavier already mentioned the size of the team, but more importantly, our typical clients are SMEs. In Germany, SMEs can be quite a bit larger, but in the other countries, let's say Great Britain, Italy, Scandinavia, we actually service quite a few clients who either are looking at coming to China or who are already in China. And there are 2 areas in which we do this in. You can see at the bottom section in red the outsourced services, where we help in a corporate, accounting, and trade level, which is to say clients who, for instance, export from Europe to China, or the other way around, where we help them to facilitate this business. On the other hand, our industrial clients, and especially again for automotive components as an example, we help them to assess the market, find the right partners, set themselves up professionally, and also staff the more senior levels locally. So that's where our knowledge stems from. You can imagine that over these 35 years, we have gone through various phases of setup and expansion support for clients. And in these 35 years, we now come to a phase, I think, after 16 years of China's WTO accession or membership, where we can look back on many of our clients' successes over this time and perhaps also some of their learnings, and translate those into what we call China 2.0. And I'll come back to that later when we talk about the key success factors at the end. For the beginning, let me talk now about Made in China 2025, because I think that's really the meat of what the current policies are about. So the way we've tried to structure it in a very simple way is to list the most frequently asked questions that we get from clients: when, why, who, and how. When, starting at the top left, as you can see, basically already announced 2 years ago in 2015 with specific targets by industry that China is looking to achieve by 2025. And really, if I may say, the 2049 date has a very specific significance, which is the 100 years of the founding of PRC, by which time Xi Jinping has openly stated China should be a leading advanced manufacturing power in the world. Some people may argue that's already the case. Others will argue that leadership is different. And I think, or we find that over this program Made in China 2025, this is really gearing towards achieving that goal. There's a second side to it, though, not just a political or industrial political side to it, which is the reasons for Made in China 2025 as a program. The first, of course, and while we write slower growth, it's still growth that is well above the averages in many other countries, including in Europe. But I would say that despite this slower growth, you also have other factors, such as in the population. The labor shortage now is a big word, but it's actually beginning to be the case. And over the next 10 years, we will see, especially due to the one-child policy, a reduction in the number of laborers coming into the market, and concurrently costs rising, where, for instance, our clients are already saying today that the level of cost in China is above the level of cost in some Eastern European countries where our automotive component clients are already active. One of the key areas of the reasons, or one of the key reasons I should rather say, why Made in China 2025 is such a focus is the final point I have here, green development. And that is for everyone, such as us now in Beijing, who knows what the pollution is like, but especially in other cities where heavy industry is. The Chinese government has clearly stated goals for improvement of public health through focused efforts in industrial policy. And that's what Made in China 2025 is definitely also about. Because if you look at the WHO, these 10 areas that are listed here, among which I think we will today talk about, especially on the side of number 3, e-mobility, it goes far beyond that, as you can see, and covers quite a wide area in terms of sectors. Most interesting, perhaps, is that this industrial policy, the way this industrial policy is actually now focused. So on the how level, the financial support, what does this mean? China has instituted a variety of government funds that are dedicated to investment. For example, bringing technology into China by acquiring overseas companies. This may or may not be an interest for SMEs in Europe, but perhaps also to sell certain key technologies for the right price. We see that happening already. The other side is financial support in the way of development of these industries. So for instance, through research funding, we see this in South China, especially in the area around Shenzhen, where there are famous companies such as Tencent or DJI, which clearly benefit from such government support. And in total, I would say that this is probably the single biggest effort in this direction we have seen ever. That's why Made in China 2025 is such an interesting topic to talk about, because we're talking about $300 billion in terms of support, where if I compare that, for example, the German government's research fund is around 200 million euros. Just to give you a sense of magnitude here, and also why on a global level this is such a big policy, and perhaps why it's worth spending more time on this topic, because as usual with very large policies, you have to really drill down into the detail to understand how you as SMEs can actually benefit from it. So perhaps now, drawing the comparison to Europe, let's look at the next slide, which shows the exposure that European countries have. This is an analysis by MERIX, the Mercator Institute for China Studies, which we can very much recommend as a preeminent think tank in the data analysis relative to China. And in this sheet, what you can see is that at the top right, we have, you've highlighted, Xavier, that I'm German. We've highlighted Germany here, since that's where the largest part of our clients come from, but also Austria, Sweden, Italy, Belgium, Denmark, pretty far on the top right, showing that the importance of high tech and the dependence on manufacturing is quite high. And that is why these countries have such a high exposure to Made in China 2025, which means, in the positive sense, we stand to benefit from this. We Europeans who are in these industries, high-tech, and we would of course count automotive into high-tech with a high level of manufacturing dependence, stand to benefit, which is why we're showing this slide. So if we stand to benefit, and you look at the next slide, how do we actually do that? I had talked about demand from a perspective just now of Made in China 2025 overall. If I look at the next slide in context, we're looking at demand for automotive specifically now. I had already mentioned environmental concerns, so that is clearly in the industrial policy of not only reducing combustion engine size, as we've seen since 2014, but also now more in the direction of e-mobility. As urbanization increases, and there we are today at already a fairly high city spread, so about 50-55% of the entire population were urbanized. The government has further goals to go over 60%, more comparable to European locations. That also means either more cars or more mobility, and definitely also has a positive impact in terms of demand. The most positive probably are rising incomes, those who live in cities, but also those who are outside. China has really pulled hundreds of millions of people out of poverty, way beyond the next level, which is to say they can afford cars, and that's why we also have huge numbers, which I'll come to in a second, in terms of car volume, i.e. sales. And then the change in consumer preferences. If you contrast to Europe, for example, where engine size and power may be a defining factor, in China, in fact, there are many other factors that are much more important. For example, leg space in the back seat. For example, a coffee cup warmer, or in this case, teacup warmer. For example, informatics or telematics with a big screen. All things that are more in the direction of Chinese consumer preferences, which also drive demand locally. Now, Made in China 2025 also interacts and predominantly interacts on the supply side, which is to say developing new technologies, which we'll talk about, new business models. Anyone who has rented a bicycle in China knows what I mean when I say new business models. And Alibaba have already introduced the first auto shopping mall where you can rent cars for short-term use from a huge car park just using your mobile phone. New manufacturing requirements. Of course, Made in China 2025 is about using new materials, lighter, more environmentally friendly, and so on and so forth. That also has a direct impact. And then localization, which is to say, if I talked about demand, consumer preferences being more in the direction of Chinese consumers, that also means on the supply side, products need to be localized much more strongly, and that means R&D needs to be much more localized. If we take demand and supply and around it see the regulatory environment, one of the biggest changes we as fiducia see for the Made in China 2025 policy is that the government, the Chinese government today, plays on all of these levels. As a regulator and enforcer, as a customer on the demand side, as a supplier on the supply side, and perhaps that's also an issue for the future as a competitor. So you look at the highest level, the large OEMs in China, so the automotive manufacturers, foreigners can still only engage in a 50-50 maximum JV with local producers, and these local producers are also very clearly government driven. I'm not saying that that's a bad thing. That's actually a good thing for China in terms of regulations and growth, but that's something to be aware of when you talk about SMEs coming to China or being in China and selling to these companies. So for today, having set that stage, what I'd like to do is look at three levels and that directly impact you perhaps as SMEs. One would be product development and how to go about that. Two is the value chain and how that may or may not be restructured through Made in China 2025. And then, of course, that big question around competition, which is specifically how do I deal with this new situation of government being a competitor or my previously smaller, widespread competitors being increasingly consolidated, which is the last point I'll be coming to before the key success factors. Moving on. The first point, product development. Here we have clearly encouraged categories. And I'm trying to set the stage here to show how this impacts component manufacturers and such that supply into the automotive supply chain. So if we look on the horizontal level, the first point would be fuel efficiency. And there's a clear government target, as I mentioned at the beginning, to reduce from 7 liters per 100 kilometers fuel consumption to 4 over the next 7 years. And clearly the government has also given the target of the use of advanced materials, such as carbon fiber, to actually achieve such targets. So we're talking smaller engine sizes for combustion, that's definitely one aspect. And then there's the other aspect of materials. Point number 2 on the horizontal level, connected and autonomous. If you speak to the typical potential buyer of a car in China today, let's say anywhere between 25 and 35 years old with the relevant income, what are they most interested in? They are not most interested in having a certain car size or speed or power. They want to have the easiest life possible with that car. That means the simplest functions, and they want to be connected. So the government, on the other hand, also has a very clear target, as we mentioned here, which is reducing traffic accidents. Anyone who has traveled in China knows that it is not always the safest place to be on a motorway, despite the speeds being average lower than, for instance, in Europe. So the government has clearly stated the number of accidents to reduce by 30% within the next 7 years. And how they want to achieve that is really through systems and digitalization, which means there will be much more guidance in terms of the systems within cars, but also on roads, and more autonomous driving. If you move through some of the larger cities in China today, you can already see semi-autonomous bus lanes, which means there are dedicated lanes on which buses are moving without drivers. This will continue within, I think, already the next 1 or 2 years in places such as Beijing and Shanghai, where you will have entire areas where only autonomous cars will be moving. In Shanghai, there will be one district dedicated to this as a test, and there will be no other cars, which is to say no self-driven cars in this area anymore. What you need for it, on the right-hand side, the components, and that's where, again, SMEs can play a role, digital and smart components that flow into such systems. The third and probably the biggest focus area for Made in China 2025 in terms of automotive, is NEV. So new energy vehicles, which includes anything from a pure electric to hybrid, and therefore constitutes today already a growing number of cars on the road. But, and that's perhaps most important, the 2025 target is that 20% of all car sales should be within the NEV area. Now, that sounds like quite a stretch, and I will come to some of the figures on the next slide. Before that, though, I think what is the biggest stretch here is the total car sales number. We're talking about 35 million cars. Today, China is already the largest manufacturer of cars, with a number of around 28 million last year. And this is supposed to increase, which to me personally, I have to say, is a wrong target to be moving to 35. And when I get asked, do I believe in all the targets that are given here, I can definitely say that the government has taken a more flexible approach to certain targets, such as this one. Why? Because we know if 35 million is the goal in 7 years, by that time there will be well over 300 million cars already in China, which is an incredible number, and traffic will simply not work. What is the encouraged component here? Coming back to the interest of SMEs, for new energy vehicles, since it's based mostly on electrical power, battery technology is key here. So that is from any direction of materials to actual technology in the development and supply of batteries, where we already have a number of clients who are in this area, either selling into China from overseas or developing and producing in China themselves. One of the questions we most frequently get when we discuss these figures and this policy with clients is whether China's e-mobility plans will really take off. Moving to the next slide, That's why we list some of the pain points here. We've already talked on the right side about the environmental regulations, some of the consumer readiness, and this industrial policy MIC 2025, as I'll refer to from now on. But on the left-hand side are the pain points. And we believe once those pain points become large enough, then e-mobility may pick up and become more mainstream. Because as usual, the government has shown the political will, the government is pushing this forward in policy, but that does not mean that the consumer will take up this new technology. And what do I mean by this? If you look at plug-in sales, 2015, we've already had a significant growth to 2016, over 500,000 sold. And now the estimate is going to 2 million in 2020. But if you look at the bottom, the share of total car sales, 1% 2015, 2% 2016, is supposed to jump in 2020. And if you remember the target that we had before, it's supposed to be 20% by 2025. That's a huge number and quite a stretch. And if we look at, do we believe that this is possible, then let's look at some of the pain points. Pollution and urban congestion is probably the two biggest factors in this direction. Urban congestion being what I mentioned before, the number of cars sold means also the number of cars on the road means huge congestion. You need only to look at some of the major holidays in China and the number of cars driving throughout China during those times to see what actual numbers, what volume we're talking about. Pollution being the other factor, increasingly not just on the production side, but in the actual consumption side, the government and individual people are taking a much closer view on pollution. There is perhaps also another, I wouldn't call it pain point, but a factor that will alleviate e-mobility, which will increase e-mobility, and that is changing business models. And this changing business model could be, as we've seen in Europe, car sharing models by some of the big OEMs that already exist, and we will see more of that here in China, but also new business models in the direction of the car rental, let's call it, even in the short term. So there are different ideas that are already in place, and I think we will see China developing this much more strongly, just as we've seen it develop in e-commerce. Moving on to product development, NEVs specifically. If you take, for example, these three directions, these three factors, these three ideas that the government has, these are not pain points, but clearly points to alleviate that pain. One, you have the zero emission vehicle mandate. There's a fixed quota, which, as you can see, 10% by 2019 already, that the OEMs must produce. So that means of all cars that OEMs produce in China, 10% must be PEVs. If they fail to achieve that, those OEMs will need to buy carbon credits from their peers or pay penalties. And this is quite significant because this is a very important, influential change that the government is trying to push through on the OEM side. So they have policies, if you remember my initial slide, demand, supply, and regulatory. Now we're looking at the supply side and the government's influence to say, you OEMs must move to this direction. They're doing more on the consumer side, which is the subsidies and purchase benefits. You can already see in China those who are lucky enough to be driving e-vehicles have a green number plate in places like Shanghai, for example, and are then exempt from the so-called license plate lottery, which means they get a license plate and can drive as opposed to having to wait and get lucky to win a license plate. Generally speaking, there are also subsidies that flow directly, again, on the supply side, as you can see here, 2.3 billion US already. And the subsidies had one negative impact, which is they also led to certain cases of abuse of subsidies. So since January this year, those have been cut. On the other hand, charging infrastructure being for electric vehicles one of the key factors, even for hybrids, there's a very clear target driven directly through the government to increase these charging piles 15-fold by 2020 and to make this, let's call it, more widespread, not just in the cities, but also in local government levels outside of the cities. So the government really is trying to do as much as it can to influence the development of e-mobility, and now that brings me on the product development side to one of the, let's say, impacts on the next slide to our component clients, but also to others. So on the left-hand side, what we've tried to do is list clearly those we see winning in this direction. You can see some of the major OEMs here, both for global and China, but especially for China, all three are Chinese players. Then we have those component suppliers, many from Europe, who are involved in this industry. We mentioned before informatics, telematics, battery technology, and so on. And then the smart component and connected hardware software manufacturers, of which there are also many from Europe, either located in China already or selling from Europe in this direction. So there we see a clear win. Of course, those who are less affected on the bottom right, a car will still need wheels, a car will still need seats, a car will still need a coating, a paint, but perhaps the total volume of cars will drop, even though the Chinese government has the 35 million target in production by 2025. We do believe that with changing consumer preferences, which is to say not to have to own a car but rent a car, that overall volume of car sales will drop. So that means even though some are less affected, there may be this impact of the drop in volume. Those who will definitely be affected, and I'm sorry to list them here as lose, and I'll be open for that as a question to interact with you if you have follow-up questions after this webinar, are the conventional car part supplies. So especially in the drivetrain, gear shift, spark plugs, lubricants, and so on, will stand to suffer as first, there is a move to e-vehicles, and second, there's a drop in volume potentially. At least that was my thought until I recently held a European workshop with manufacturers of components, of which there were 15 participants from very large drivetrain manufacturers to very small component manufacturers, all of whom were very positive. Why? Because they have been engaged by Chinese OEMs to develop drivetrains for hybrid vehicles especially, and see that the drop in the value of what they are selling by piece will actually be offset by the volume that they're selling to Chinese OEMs. So again, here my assumption, our assumption would have been more on the losing side for conventional car part suppliers. In fact, what we are hearing from clients, and in this specific case across the board in China, European manufacturers, is actually positive. Coming to the next point, which is value chain. Again, let me start with the guidelines and the key actions that the government is pushing through Made in China 2025. 3 levels here on the product development side, higher R&D. So there are specific targets also, especially for indigenous manufacturers, domestic manufacturers, to increase their share of R&D, which today is definitely below 5% for the most OEMs and component manufacturers, to above that level. And how to do that, there are very clear tax incentives the government is also providing for pro-innovation companies. Even foreign companies can take advantage of this, and I'll come to that in my next page. Perhaps before that, let me focus on the middle section, manufacturing, and especially green manufacturing. This year, one of the biggest influences negatively on the supply chain has been the shutdown, especially of sub-suppliers of our clients, who, through the environmental audit process that is new in China since this year, for instance, in paint areas or in manufacturing of toxic or use of toxic materials, has seen a significant decline because of shutdowns, which in the long term, of course, is a good thing, but in the short term has meant supply chain disruptions. The government is focusing on green manufacturing here, and I think we can expect over the next 1 to 2 years in this increased anti-pollution and compliance push, which once again we see for European manufacturers as being positive, because our experience is that our clients themselves do very well. At the moment, our clients suffer because their Chinese sub-suppliers perhaps are not adhering to all of these regulations, or are being pushed to consolidate in this area. One of the highlights we see is actually the third section, sales and after sales, since today, as you probably know, the after-sales market is a fairly small market in terms of share of overall, and the government has now pushed or is pushing a goal of 45% of the overall value chain of automotive to come from after-sales services. That means, and this is already by 2020, it should be 55% by 2020-25. That actually means anyone who's engaged in after-sales and services has a great potential, no matter how large or small the company and no matter what type of product you're talking about. It can be from a windscreen wiper to an oil change, to a tire change, and so on and so forth. This will see a massive growth, which we already see today. Now, we've also mentioned some of the key actions here, which we suggest clients and we've seen clients implement. I won't go through them one by one, but I do think that this final section, especially in regard also to e-commerce, is a area in which SMEs can very quickly gain advantage in the market if they're especially branded product suppliers into the automotive value chain. At the beginning of this slide, I spoke about R&D, and let me take you to the next slide where I can show you how our clients, foreign investors in China, benefit from this under the High and New Technology Enterprise Program. The simple incentive, as very often in China, is financial. A reduction from 25% to 15% for corporate income tax for companies located in China, foreign companies located in China, who are registered under this HNTE program. What you need to do is listed on the left-hand side, and we have helped clients or shepherded clients through this process many times. And I can say that not only do clients benefit from this from a financial perspective on the right-hand side, but also because this actually, in a way, forces them to localize R&D more strongly, which, if I go back to my page around localization of products, actually means that you are in a much better place to do this if you have localized your R&D in China. So this would be an example, an opportunity for you within the value chain to gain a benefit. Biggest benefit, again, after sales, even if you're not based in China. And if you are based in China, in the value chain, HNTE can be that benefit. Let's talk about one of the stickier points, which is competition. And of course, we have clients who are perhaps unhappy or worried, at least, about the situation that the government is increasingly indirectly influencing the market on a competitive level. There are clear goals for this because China does want to, under Made in China 2025, develop so-called national brand champions. And as I said before, in the direction and goal of becoming the leading advanced manufacturing power, these so-called super brands and national champions are a key element of it. That means here on the left-hand side, the objectives of upgrading and increasing domestic market share, the super brand development. We today talk about over 100 car manufacturers in China, domestic. There has to be and will be industry consolidation driven by industrial policy. And then not only in China being super brands, but also internationally. So if you today travel in Southeast Asia, I've just come back from 2 or 3 countries in that area, I can tell you that most of the light vehicles you see on the road today are actually from Chinese manufacturers who have developed products that are so-called good enough for not only the Chinese market, but also for the Southeast Asian market. And I think we will see more of that in the future. On the right-hand side, you see some of the targets also that the government is seeking to reach. 80% of a domestic share in the electric vehicle side, and also on the domestic share of driver-assisted and partially automated cars, 40% by 2025. And now, if you consider how that is really possible, I've explained it at the beginning. Made in China 2025 has very clear targets and directions. And of course, in level of competition, what does that mean for you as an SME engaging with China? We have found that clients, while worried, can make the right preparations, which I'll come back to as the key success factors. But we can also see on the next page that global and local players alike see certain benefits, but also certain, let's call it risks. If we look at the risk on the right-hand side, the German ambassador, for example, Michael Klaus, has stated very publicly that foreign car makers would be forced to hand over 100% of their technology. In fact, while I agree with him, the bilateral agreements currently between Germany and China, and futurely the wider agreements between the European countries and China, will actually not be as stringent as initially assumed. But still, competition is very, very significant and create hurdles, as you can see in the bottom quote, especially in the direction of key components such as batteries. Why? Because the Chinese government is attempting to get local players ready to be super brands, to be national champions, such as BYD, one of the preeminent battery makers, but also those engaged in info and telematics, such as Tencent or Alibaba, who have now set up their first joint ventures with car manufacturers to develop cars that Chinese consumers actually want. So if you look at competition, what I'm trying to say is, yes, there's competition top-down from the direction of the government and Made in China 2025, but there's also a clear opportunity for European players to play a role because there's such new development from a consumer perspective in regard to electric vehicles. So that's why on the bottom left, you can see one of the positive quotes, innovative foreign enterprises who stand to benefit. And of course, you know, we're sitting here in November 2017. Let's see, Xavier, what we say next year or the year after, whether these fears or hopes will come true. And perhaps on the way to that, there are some key success factors that I'd like to highlight on the next slide. We've taken certain building blocks here, and I'll go through these building blocks one by one very briefly, predominantly for clients and companies who already are in China. That could be either such as European SMEs exporting to China or SMEs who are already invested in China. And here you can see the point in the middle top, organizational transformation. If you remember at the beginning of the presentation, I talked about China 2.0, or for some of our clients, China 3.0. This is what I'm referring to. Many of our clients set up in China 10, 15 years ago, and today are going through a period of transformation because they have new customers, which is in the bottom middle. They have new partnerships on the bottom right, or they need to set these up, and they're going through a level of transformation, hence the term China 2.0. They've also localized R&D at the top left. Another example, making them more successful in the Chinese market. And irrelevant now, moving to those who are not yet in China, irrelevant whether you're in China today or not, the bottom left and top right, continuous market research and policy monitoring are absolute must-haves. And these are not, in our opinion, things you should do one-off, but rather, that's the implication of the word continuous, look at how China is developing in your relevant niche or pocket of growth to see what your opportunities are in either supporting your existing international OEM customers or tier 1 or tier 2, tier 3 even, as well as the Chinese OEMs and their supply chain, because that's where I think a large section of the growth will be coming from in future. So that was just a couple of key success factors very briefly. We very much advise clients to not only do this policy monitoring and market research on an ongoing level, but to engage especially with a strategic partnership level, which is to say, if you're not selling in China, if you're not already in China today, to engage distributors who can be effective in the Chinese market on your behalf. And if you are in China already, to consider going through this transformation process as you attack the market and its growth, especially on the Chinese level. With that, I come to the end of my webinar. Xavier, thank you very much for this opportunity. And as mentioned, we are very happy to take any questions and comments from your members after this.
Thank you very much, Stefan. This has been one of the most interesting webinars I participated. It's on a topic that is really now in the discussion and all discussions in the European Chamber. We have an automotive working group, and I know that 2 days ago they were discussing exactly these topics. So I believe that there will be a lot of questions from our audience, and if that's the case, please you can contact the Stefan directly. You've seen already his contact details, or you can contact the EU SME Center, and we will forward the questions to Stefan and his team. Thank you very much, Stefan, for this, and we hope that we can have you in 1 year again explaining this, because as we explained when we were talking before the webinar, probably many things will change and there will be many developments in this area. Thank you very much.
Thank you, Xavier. I look forward to it.